Good morning, everyone, and welcome to the latest of our FrenchEntrée webinars. My name is Zoe Smith. I'm digital editor of FrenchEntrée. And in this webinar today, we're going to be talking about buying property in France and moving to France in 2021 and beyond. I'm going to be hosting this webinar for you this morning, and I'm also joined by a panel of experts from our partners at Stone King, Moneycorp, and Blacktower, who I'll introduce you to in just a moment. We're streaming live to Facebook as well, so welcome to anyone who is watching us over there. And we'll also be recording today's webinar, and it will be available to stream for free on our website. And we'll make sure we send the link out to everyone who is attending today too. For those of you that aren't familiar with FrenchEntrée, we are part of the France Media Group, who are specialist publishers covering all aspects of French life and culture, from travel to gastronomy to buying property. FrenchEntrée itself has been a leading resource for French property buyers since 2003. Not only do we help buyers to find their dream properties in France, we also help and advise with every aspect of the property buying journey. We have a vast network of trusted partners on the ground in France, which includes real estate agents, mortgage providers, currency exchange specialists, and legal and financial advisors, right down to architects, surveyors, removal firms, and health insurance providers. Essentially, whatever question you need answering, we can point you in the right direction. You may also be familiar with the FrenchEntrée magazine, and we also produce a free weekly newsletter written by myself. If you're not already subscribed to that, you can head over to the FrenchEntrée website after the webinar and sign up. And if you're looking to buy property in France, I'd also recommend signing up to become a FrenchEntrée member. It's completely free to sign up, and it gives you access to some really useful features such as customizable property alerts, as well as free advice from our property team and mortgage advisors. In terms of the content today, this is the second of our three-part Destination France webinars, focusing on buying and moving to France in 2021 and beyond. In our webinar last month, we focused on many of your questions concerning the current property market in France, as well as the tax and healthcare considerations for those of you looking to move to France. And if you missed out on that one, the entire webinar is also available to stream for free over on our website. In today's webinar, we're moving on to the second step in your property buying journey. We're going to be focusing more on the legal and financial aspects of purchasing property in France. I'm joined today by a panel of three experts who've kindly given up their time to share their insights with us and answer your questions. We're aiming for a runtime of just over an hour today, and each of our speakers are going to give a short presentation, after which I'll be putting some of your questions to them. We'll also be conducting a couple of polls to make sure you're all still paying attention, and we'll also have some extra time at the end for more questions. So make sure you stick around until the end of the webinar. If we don't get a chance to answer your questions today, either because we run out of time or because they are questions better suited to a different expert, please be assured that we have read all of them and we will endeavour to answer them. As digital editor, I always pay close attention to the kinds of questions and concerns that you have, and that will play a big role in the kind of content that I will be looking to create, both for our website and for future webinars. So please do take this opportunity to let us know what's on your mind. You can put your questions in the Q&A box on your screen at any time throughout, and please do use the Q&A function, not the chat box for this, otherwise we might miss them. And if you're watching this on Facebook, you can also leave a comment and one of my colleagues will pick that up. So without further ado, I would like to introduce our panel of experts, and another huge thank you to all of them for taking time out of their busy schedules today. First up will be Dan Harris, who is a partner at Stone King, international legal advisors who specialize in cross-border property law, tax, and estate planning. He's going to be answering some of your most common questions concerning French property law, tax implications, and inheritance laws. Next, we have Mar Palmer from Moneycorp, foreign currency exchange specialist, and she's going to be honing in on the importance of currency exchange when purchasing property or moving to France, and talking you through some of the options available to ensure you lock in the best rate. And last, but certainly not least, we have Rosemary Shepherd from Blacktower, who is specialist in international wealth management and financial planning. She's going to be talking to us about planning for your financial future in France, including tax-efficient investment options, pensions, and some of the financial considerations to take into account before you move to France. One final note before we get started. Many of the presentations today do focus on UK buyers, and I know a majority of you are from the UK. However, if you're joining us from outside the UK today, don't worry. The majority of the information in today's webinar will also be relevant for other non-EU buyers too. So that's more than enough from me. So let's go straight over to our first speaker, which is Dan Harris from Stone King. Over to you, Dan.
Good morning, everyone. So I'll just quickly attempt to share my screen first. And are you able to see the presentation? Excellent, great. Okay, so yeah, so thank you, Zoe. So I'm Dan Harris. I'm from Stone King LLP. For those of you who aren't familiar with Stone King, we're a law firm that's been around for over 230 years. And although I personally haven't been around for that long, it sometimes feels like it. I'm first of all going to make a few comments about buying during COVID, because I know people are still generally concerned about how difficult it might be. And although I can't really comment on what it's like actually going to view properties and walk into the offices of professionals, from a legal perspective, COVID actually hasn't caused any problems or any delays with the actual transfer of rights. We're still working 100%, and we have been all the way through, as are our notaires. You don't need to meet us face-to-face either, or to come to the office, because everything can be done remotely. But please do remember that you need to have your ID sorted out as quickly as possible. We can actually help with electronic certification of ID, which is really does save you a lot of trouble, because you don't have to have it certified by an independent solicitor. Working remotely for us isn't a new thing, because our clients literally come from anywhere in the world. We help with legal advice in pretty much every jurisdiction in the world, to do with succession and taxation. But about 50% of our work involves clients who have assets in France. So, you know, we really are quite focused on France. The beauty is that you don't even need to go to France to sign preliminary or final contracts, because we can help you execute a procuration, which is a kind of French power of attorney. You can sign that in the UK, and that can be used then by the notaire in France to sign any documents on your behalf. So today I'm going to run through a few common questions that we get from people who are buying property in France. I'm not going to be dealing specifically with the buying procedure. We simply don't have enough time for that. But if you do have any questions on things like on survey, on diagnostics, for example, so diagnostics are tests that are done on properties covering things like termites, electricity, asbestos, lead, gas, all of those sort of things. Not the same as a survey. Okay, not the same as a survey. If you have any questions, any of those things, I'd be happy to answer them. The 10-day cooling off period and all of those bits and pieces, we're not covering in any detail today, but I'm happy to answer any questions on all of those things. So typical questions coming from buyers. How do I make sure I'm 100% protected when I sign the compromis or promesse de vente? I will be taking out a mortgage. What happens if I fail to get finance? Will I lose my deposit? Can I buy a property with friends and family members? You know, someone who's not a spouse or a partner. I hear that's easy in France. What are the pitfalls? So we'll have some fun with that. What do I have to think about tax-wise if I'm buying property? I intend to run a gîte, a B&B business. That's quite a common one that we come across. Why do I need my own notaire if notaires are supposed to be impartial? And finally, is it true that I may not be able to leave my French property to whomever I want in my will? So starting off with preliminary contracts, how do I make sure I'm 100% protected when I sign a compromis or a promesse de vente? And first of all, it's worth mentioning that there are differences between the compromis and the promesse. A compromis is effectively a contract between two parties, a buyer and a seller, where the seller agrees to sell and the buyer agrees to buy, and both of them are bound by their contract. A promesse de vente is a promise from the seller to sell to the buyer, and the buyer usually provides a sum of money to secure that promise, but it means the buyer can actually pull out. The important thing to remember is that a compromis de vente and a promesse de vente, this is the first contract that you sign. So in the UK, if you buy a property, you'll go in, you'll make an offer, The offer will be accepted. You're probably going to have a glass of champagne, and then you'll start talking about signing a contract. Okay, you're not actually bound by that contract until all of the survey's been done, all the checks have been done, and you're happy that you actually want to go through that contract. It's a subject contract. In France, that is not the case. That's a really important point. It's not the case. That initial contract is binding. Okay? You sign that contract, it is binding. And contracts can be drawn up by anyone, and they're often drafted by estate agents. And they contain really, really important details that you will, as I say, be bound by. The price details exactly what you're buying, including size and boundaries. Boundaries in France, incidentally, have there's a 5% tolerance. They'll cover the completion date, easements and rights of way. They'll cover co-proprietorship details, and there will be conditions attached to that initial contract. And as I say, they're binding. So you should insist that contract is drafted by a notaire. And above all, if you take nothing out of this presentation today, do not sign anything at all, without having it first checked. Moving on to the next point, deposit and conditional clauses. I'll be taking out a mortgage. What happens if I fail to get finance? Will I lose my deposit? The short answer is probably yes, but it is possible to insert a condition, a clause suspensive, which makes the offer conditional on getting a mortgage. Many notaires actually won't even consider drafting a promise or compromise unless the mortgage is more or less agreed. And the clause suspensive, they can be very, very wide ranging. They can include things like planning permission, but what they can't include is they can't include a chain. Okay, so in the UK, you can make an offer on a property and it can be conditional on selling your own property. You cannot do that in France. You have to have the money available. So you either have to have a mortgage in place, or you have to have the cash. Buying with friends, this is always one that causes hours of endless angst, if I'm honest. Can I buy a property with friends and family members? So someone who's not a spouse or a partner. I hear that's easy in France. And what are the pitfalls? So yes, there's no reason why you can't buy with friends. It's just as easy in the UK, but you get exactly the same problems in France as you do in the UK. So usage is a really big one. I could buy a property, I could have a big family, I could have lots of friends, and I'll want to share that property with family and friends. But the co-owner may not like that. They may not be as keen. Or alternatively, I may have a small family, and my co-owner may have a large family and lots of friends who they want to share the property with. Payment of cost, we may agree to pay all the costs equally. The problem is that I may want to use the property 8 months of the year, and that could include people who are not my close family using the property, and the other person may only use it a few months of the year. And at some point, the point will be raised: why am I paying 50% of the cost when I'm not getting 50% of the use? So there are all of those sorts of things that crop up. If a guest or if your co-owner damages something, who's paying for that? Is it the co-owner, or is it both of you? Who actually deals with that? Tax considerations. What do I have to think about tax-wise if I'm buying a property? I intend to run a gîte in the B&B business in France, and this is a really common one we come across. People often who are retiring are thinking that a gîte is actually going to be quite a good way of generating some additional income. I know it's very, very hard work, so I'm told. But apart from that, the sort of taxes you've got to think about: taxe foncière and taxe d'habitation. Taxe d'habitation is paid by the occupiers of the property. Taxe foncière is paid by the owners of the property. Could be the same people, of course. Capital gains tax. People often going out to France think, well, okay, I'm going to buy a property with a barn. I'll convert the barn, turn it into gîtes, put lots of work in. It's going to double in value. I'm not so worried about the capital gains tax, because I'll be able to offset all the money I spend converting the barn. I'll be able to offset that money against the capital gains tax, as I do in the UK. And actually, it's a little bit more difficult than that, because the only offset that's allowed is offset that's work that's done by French approved artisans, approved tradesmen. The invoice has to be in French. And also, the other problem is the capital gains tax. In France, it's calculated in a similar way to the UK. But in addition to the capital gains tax, there's an additional tax which is added on to the capital gains tax. The calculation is done in exactly the same way, but it's to do with social charges, social taxes. And the problem with that is that the capital gains tax can be offset against UK tax, but the social charges cannot. Income tax, of course, you've got to think about if the property is left. And of course, there's double taxation because you may be paying tax in France on the income and tax in the UK on the income. There's a double taxation convention which helps out with that. Don't fall into the trap of thinking, well, I'm a UK taxpayer, I don't have to pay tax in France, or I'm a French taxpayer, I don't have to pay tax in the UK. Chances are that's not the case. You're going to get caught, or at least you need to adopt a correct procedure to make sure that that you're not going to have problems. There's room tax for gîtes as well. It's paid per bed, per night to the mairie. And regulation on gîtes is also worth mentioning. Gîtes are very tightly regulated in France. It's a service and industry that's very tightly regulated. We do hear from some of our clients, our UK nationals in France who run gîtes, that those regulations are actually enforced much more rigidly for UK nationals who have gîtes out there, or foreigners who have gîtes out there than for French nationals. One notaire or two. So in France, in theory, you can use one notaire for the buyer and the seller. Terrific, you think. Great, we're going to save some cash here. The problem is that notaires, in our experience, seldom tend to be impartial. And it's not because they're unprofessional, it's human nature. A notaire is always going to do the better job for the people he or she can relate to, the ones that the notaire has a relationship with. And the reality is that they're seldom impartial. So our recommendation, strong recommendation, is that you have an independent notaire who's looking after you, looking after your side of it, and is looking after the transaction from your perspective. The other point is there is no saving in cost. And the reason for that is that notarial fees are set across France. They're standard fees for doing a standard job. If two notaires are working on the job, they split the fee between them. Cross-border notaires, we would also strongly recommend. There are not many of them around, I have to say. Many of them that we've worked with over the years, we've helped them actually understand a lot of the cross-border issues, particularly to do with the UK. They offer even more cross-border protection. They're used to dealing with foreign clients, and they also understand the legal and cultural differences. And don't underestimate how important that is. In the UK, if you buy and sell a property, you know from talking to friends, family members, talking to people down the pub, what the procedure is, how it all works, and because there are no language difficulties, you can speak to your lawyer about it and get a good understanding. In France, the process is different. It's different, and people in France are aware of how it's different, but often notaires are not aware of what you don't know. So it's a really important point that the cross-border notaires do understand the legal cultural differences. Can I leave my French property in my will? Again, this is a massively underestimated issue. People often say to me, my situation is really simple, Dan. I've got a property in France. It's really simple. And as soon as they say, I've got a property in France, it stops being simple for all sorts of reasons. There are all sorts of other considerations. There are conflicts of law that arise, and things are done differently in France. And the fact is, you may not be able to leave your French property to whomever you wish, because French law incorporates something called forced heirship. And what that is, it's a set of rules. It's a bit like our intestacy rules, which apply to ensure that certain members of your family receive your assets, regardless of what it says in your will. Okay, so it's not like our intestacy rules, because they only apply when there is no will. These apply whether or not there is a will, and they will override your will. Generally speaking, for UK nationals, there is a way around this. It's the EU Succession Regulation 650/2012. And this allows British nationals to make an election for the laws of their nationality to apply to the devolution of their estate. So if an individual, for example, is from England and Wales rather than Scotland or Northern Ireland, they have testamentary freedom, which means they can leave their assets to whomever they wish. elections are not always a good idea. Okay, lots of lawyers just slap an election saying they're a good idea without actually looking at circumstances, but there can be problems, including major adverse tax consequences. Children from previous relationships, for example, can be charged up to 60% tax, and trusts, if assets are left in trust, they can be charged up to 83% tax. And the reason for that is that tax in the UK is a tax on the estate, not on the individual. Tax in France is a tax on the individual. And children, for example, have a tax-free allowance of 100,000 euros and then pay tax on a sliding scale of between 5% and 45%, whereas unrelated beneficiaries, such as children and in some cases trustees, they have a tax-free allowance of 1,594 euros and pay tax at a fixed rate of 60%. Also beware of things like matrimonial property regimes. Okay, these are marriage contracts which people can enter into without even knowing they're doing it. We've come across that quite a lot, and they determine how your assets are going to devolve. And also you need to, when you're buying property, consider the ownership structures, because that will have an effect on who gets what of your property when you pass away. You need to look at things like tontine clauses, SCI, which is a kind of French company set up purely for residential property, UK corporate structures, which we really, really strongly don't recommend as a rule. There has to be a very good reason for doing it, and so on. But importantly, and this is hot off the press, this is big news at the moment, Article 913 of the French Civil Code, a bill has just been passed through the French Parliament to bring this in. And effectively, it's a bill that's aimed to defeat the principles of the European Succession Regulation, which allows you to make a choice of law. What it's doing is it's effectively creating a situation where if you or a beneficiary child are either resident in France or a national in France, then those children can potentially make a claim against your estate, okay, regardless of what it says in your will. So if you want to leave everything to your spouse on the first death, children on the second death, this is a provision that may stop that from happening. So that pretty much brings me to the end of the presentation. Just suffice to say, the Stone King can help with buying and selling in France, estate planning and tax for France, and with UK and French wills. We have a buyer's guide, a free buyer's guide. So if you'd like to ask FrenchEntrée to pass us your details for the purpose of providing you with a free property buyer's guide, we'd be delighted to send that on to you. Thank you very much, and back to Zoe.
Thank you, Dan. There was a lot of really useful advice and tips there for those of you looking to purchase in France. And if any of you do want to get hold of that buyer's guide that Dan just mentioned, you can send us an email at webinar@FrenchEntrée.com. So we're now going to put a few of your questions to Dan. First question is from Donna. She says, as Americans, how much time can we spend in the home we buy in France while avoiding certain taxes? For example, we were recently told that there's a limit of no more than 6 months at a time. You need to unmute, Dan.
I'm sorry, could you repeat the question, please?
Sorry. So Donna says, as Americans, how much time can we spend in the home we buy in France while avoiding certain taxes? I'm assuming they're talking about income taxes.
Yeah,
sorry. We were recently told that there's a limit of no more than 6 months at a time.
Yeah, so it depends, as you said, depends on the taxes, taxe foncière, taxe d'habitation, their property associated taxes, they'll be payable anyway. Things like income tax, capital gains tax, they're based on your residence, whether you become a French resident. And there are two rules. One is if you're in France for 6 months or longer, then you become French resident for tax purposes and having to pay tax. And the second rule is if you spend more time in France than any other jurisdiction. So if for example, you spend 6 months let's say 5 months in France, 3 months in the US, and 4 months in another jurisdiction, let's say the UK, then you will become a French tax resident for tax purposes. And of course, being a US resident, I'm aware that as a US person, you will also be subject to IRS worldwide tax. There are double taxation conventions between the UK and the US, which can help with all of these things, by the way. So you shouldn't end up getting paid paying tax twice. Although as with all double taxation conventions, you'll always end up paying the higher of the two taxes.
Thank you, Dan. Okay, another question for you, Dan. This one's from Linda. She says, are there any problems or things to consider when purchasing a monument historique in France?
I have to confess that's one that I'd have to pass on to onto our specialist notaires, because that so the short answer to that will be yes. In the same way that if you buy a property in the UK that's subject to planning and development restrictions, there will be issues. In all honesty, I couldn't tell you exactly what those are. That's the sort of thing that we put past our specialists.
Great, thank you for that, Dan. So Linda, we'll get back to you on that question when Dan's had chance to actually find out the specific things that are related to a monument historique. One more question for you, Dan, before we move on. This one's from Ian. He says, we live and own a home in Norway. Do your experts know if we have a period of time after we become resident in France to sell in Norway before we're liable for French capital gains tax?
So the same thing applies. You will be liable for French capital gains tax, certainly when you become resident in France. You're also liable for French capital gains tax on the sale of a French property anyway. So if you own French property, you sell it, you'll be liable, and that will be deducted by the notaire at the point of sale.
Great. Okay. Thanks, Dan. So we're going to stop there with the questions for Dan for the moment. Thank you. We'll be coming back to Dan with some more questions at the end of the webinar. So if you do still have questions, remember to drop them in the Q&A box at any time throughout, and we'll pick them up. So before we go over to our next speaker, I'm going to put the first of our polls up on the screen. Let me just find that one. Okay, here we go. So this is a two-part question here. So the first question is, what's your budget for buying property in France? So we've got under 200,000, 200 to 400,000, 400 to 700, 700 to 1 million, and 1 million plus. And the second part of the question is, are you a cash buyer? So are you looking to buy outright, or are you looking potentially to take out a French mortgage or some other funding option? So I'll just give you another minute to answer those questions. Looks like most of you have already answered. Okay. I'll just give that another few minutes. So 70% of you already answered. So now's the time. I'll just give you another few seconds. Okay. I'll give you another 10 seconds and then I'll end this poll. We'll see. So it looks like the majority of you are cash buyers. Let's have a look. Okay, right, I'm going to go ahead and end that poll. I'll put the results up on the screen for you. So yeah, so the majority of you are looking to buy within the 200 to 400,000 range, but closely followed by the under 200,000 range. And yes, and the vast majority of you are cash buyers, 85%. So thank you very much for taking part in that. I'll stop sharing that with you now. And we're now going to go over to our next speaker, which is Mar Bonin-Palmer at Moneycorp. Over to you, Mar.
Thank you, Zoe. I will attempt also to share my screen with all of you. Bear with me 1 second. Share screen. Hope you can see that. Can you see my presentation? Perfect. So my name is Mar, and I'm a senior relationship manager at Moneycorp. Moneycorp is a foreign exchange specialist, and we do nothing else but helping individuals exchanging their funds from one currency to another. We have been in the industry for 40 years, and our expertise has traditionally focused on overseas property transactions. So we are very familiar with the different stages and with the different challenges that buyers may have when buying a property abroad. From the very beginning, when they are looking for a property to buy and they haven't yet found it, to the moment where they find the property and they secure that property and have to pay a deposit. right through the time where they have to complete and pay for the price. And afterwards, we support our clients buying a property in France with maybe a smaller and more regular payments to cover a mortgage or repatriate a pension, rental income, or just pure property maintenance. As you can see in the map that I put, we have quite an international footprint these days. We are traditionally, originally a UK company. However, we have headquarters these days in Dublin, covering all our EU residents and also in America. So I know I'm talking from you from the UK and most of you are based in the UK, but so you know, we can help if you are based in America, buying in France or elsewhere in the world. Today, I'm here to speak about the impact that foreign exchange can have on your transaction and on your property purchase. I'm going to talk a little bit about or illustrate a little bit that impact or that risk through two examples. These examples will allow us to see in real time, let's see, the cost and the risk of it, but also will allow us to see a little bit what has happened in the currency markets last year and this year, which hopefully also will give you a little bit of information about where we are, where we've been. I'm going to then speak a little bit about how can we help you manage this element of foreign exchange. And I'm going to finish with some final thoughts or top tips. To then I will leave a little bit of time for questions that you may have. So let's just start understanding a little bit like the impact that foreign exchange can have on your transaction. Most of you will need to pay for that property, complete on that property in France in euros, and most of you are currently holding funds in another currency, which will need to be exchanged at some point. If you take into account the fact that exchange rates are constantly fluctuating, and sometimes, as we will see in an example, these fluctuations can be quite sudden and unexpected. And if you also take into consideration the average timeline of a property purchase in France, which is around 3 months, you can start understanding the risk that these fluctuations and these changes can pose on the value of your transaction and on the final price that you are paying for the property. It is likely that the exchange rate that you got at the time of putting that offer on that property is completely different than the rate that you have at the end when you come to actually pay for the final price for the property. However, and despite the risk that FX create, a foreign exchange create, this element is often forgotten or lost in the amount of things that you guys have to start looking when preparing for buying a property abroad. And as you will see in the examples that I will show you, it can become quite costly and quite surprising for some buyers if you leave it at the last minute. Before I go into detail on how we can help you manage this, let's go through some examples. And I'm going to actually put some currency charts on. I know that some people is a bit scared of that, but we will see the currency chart via some examples of people buying a property. So hopefully that will be less intimidating. I'm going to use two currency charts. Both of them are going to show us the fluctuations that the sterling have had against the euro on the last 18 months. In the first graph, we are going to have a quick look of how COVID and the last month just before Brexit affected the currency. And as I said, I know that some of you are not in the UK. However, I think this example will help us all understanding the risk of the low and the highs that the currency markets can have on the property purchase. And of course, I'm more than happy to then have any questions or maybe any conversations one-to-one about any particular currency pair that you may want to discuss. I'm going to put the first graph on, and as I said, this is showing it's a little bit what happened last year. And as you can see, first thing, COVID had a massive impact on the currency markets and especially on the pound. Actually, the pound was one of the big losers last year. And I have to say that if you hold in dollars, the dollar, especially the dollar, but also the euro, cope much better under the circumstances. We saw the rate coming from on February rates of 120 to a drop of 105 in March when the pandemic started. We saw at that time a lot of buyers, and I have put an example there, that were already involved in a property transaction. So people that had already committed to buy a property and they were forced to complete on the property when the drop happened. And as you can see, that can have a massive impact on the price that you are paying. If you take into consideration that in February 2020, just before the pandemic, a property for 250,000 euros would have cost about 208 to a couple. Suddenly in March, this property escalated to 231,000 pounds. And even for those who managed to delay and push a little bit completion to maybe May, when it was the highest of the year, it will still be a difference of 10,000 pounds, or for those who are not familiar with the rate, about 12,000 euros increase on the price. We also saw at the end of the year a similar situation. Actually, the end of the year was quite a peculiar situation because we had Brexit and we saw a lot of buyers pushing to complete before Brexit was actually taking place, hoping that they were going to be able to secure a status in Europe as European buyers. So there was a lot of people rushing to complete just before before Brexit. And for those who actually managed to complete after Brexit, they found the surprise when they saw the rate dropping to 107 and suddenly again have a massive impact on the final price that they pay for their dream European property. Moving to this year, we actually seen that the pound has recovered some much better, is doing much better. And actually in this year, we haven't seen the extremes that we saw last year. So we've seen the rate probably at the lowest back in February at 113. And we recently in August have seen the highest at 118. However, 113, 118 is still quite relevant if you're buying a property. Just in the example we've seen, it could again mean a difference of 10,000 or 12,000 euros on the purchase price. And the previous example was a very good example for me to talk about the risk and the costs that foreign exchange can pose on your transaction. But I'm going to use this example to actually be a bit positive and talk to you about the opportunity that foreign exchange can pose for you. So foreign exchange well managed can not only protect your budget, but also maximize your budget. And to bring or to illustrate this example, this positive example, I'm going to bring the case of Mr. and Mrs. Lucky. Mr. and Mrs. Lucky found a property to buy at the end of July in France. And when they found the property, they put an offer and the offer was accepted for £250,000. At the time, the rate was 115. And that means that the property would have completed at a cost of 117,391 pounds for them. They were very happy. And a couple of days later, they were presented with the compromis de vente on the 5th of August. The rate by then has improved. And as Dan has explained, after the compromis de vente, there's a cooling off period of 10 days. After that cooling off period, the contract becomes binding and the buyer is liable to, or normally is asked to pay a deposit of 5 to 10%. By the 12th of August, just because Mr. and Mrs. Lucky are not only lucky, but they're also very clever, they have got some guidance and they know that the rate and the pound is getting stronger. And on the 12th of August, they decide when the rate is 118, not only to pay the deposit at that preferential rate, but also to fix the whole amount of the purchase price at 118. Mr. and Mrs. Lucky are not only managing with what we call a forward contract, which I will explain later, to protect their budget. Furthermore, they have been able to maximize their budget. And now the property is not going to cost them 270,000, it's only going to cost them 211. And with this extra 6,000 euros, probably they can pay for notary fees, or they can pay towards the taxes, or for maybe a bit of the renovation. So as you can see in this example, foreign exchange is is not only a risk, but also well managed can pose an opportunity to actually maximize things for you. I don't have a lot of time to speak about currency and what is going to happen in the markets. And I'm sure that some of you have some questions which I'm happy to answer. But just to give you a bit of a flavor, right now, we are still very much driven on the currency markets by COVID. And as COVID is an element that is uncertain and unstable and difficult to manage, so is the currency. Very difficult for us to forecast things right now, but the pound is holding quite strong against the euro, and experts believe that this is going to continue. And if you are holding US dollars, probably you've seen last year, but also this year, quite a strong US dollar. And this is usually because when there is instability or uncertainty in the international markets, people tend to go to safe haven like the US dollar, and we tend to see the US dollar kind of keeping strong there, and that's why. So what can we do to manage all this uncertainty and all this volatility when we are buying a property abroad? My first advice here or tip here is plan, plan, and plan. It's often one of the questions we are always asked. We have clients that come to us like, how early in advance may I get some guidance about currency? Well, it is never too early. At Moneycorp, we follow the journey of the clients, sometimes even before they travel to France to look for a property. Getting familiar with the rates will help you setting up your budget. Getting in contact with a foreign exchange specialist will help you at no cost to understand the market and your options. Get a good rate of exchange. I know that sounds very obvious. Get a good price. And this is very simple for me. Don't go to your high street banks. High street banks will not offer you a competitive rate of exchange. Usually, as an average, a foreign exchange specialist will save you about 2% in comparison with high street bank. So regardless of where the market is at the time, you can always, or we can always save you some savings by coming to a specialist rather than going to your bank. Get your guidance and know your options. Every client at Moneycorp is assigned to a personal dealer. The personal dealer will discuss with you your circumstances, your budget, and your options. Because you see, you have options, as you have seen in the example. You can book a rate in advance of a payment, even in advance, even before 2 years, through what is called a forward contract. A forward contract, I'm just going to say something here because normally it's a very popular subject for property buyers. A forward contract can be a great tool for someone buying a property abroad. And there is 2 reasons mainly why someone buying a property abroad will lock the rate through a forward contract. Either you need to have the certainty of knowing exactly how much you are buying for that property because your budget is very sensitive, because you want to have that peace of mind. So you lock the full price when you find the property, knowing exactly how much that property is going to cost you. Or you could decide to lock the rate because suddenly the rate has become so attractive and so good that you want to take advantage in advance of your payment. Aside of a forward contract, you could decide to imagine that you find the property and you say, actually, I'm very optimistic. I actually think that the rate could actually improve even higher. So I'm going to plan a little bit or maybe try to target a better rate of exchange through a market order. So if the market gets there, Moneycorp is going to change the funds at that rate. Obviously, the rate can move in my opposite direction. So we have something also called a limit order, by which we are also protecting you from any drop on the rate. This is very interesting because it allows me to say, I would like to exchange my funds at 118. So I'm going to put a market order at 118, but I cannot afford to buy that property if the rate falls below 114, in which case I'm going to put a limit order. So I'm protecting my budget. I don't have much more time to go into more detail about that, but as I said, I will be happy to take any questions if we have the time, or you can contact me. Just a couple of final thoughts, and this is a little bit like a homemade thoughts after 15 years of experience and speaking with a lot of clients. Plan in advance. I know I have been speaking about that through all my presentation. Very important. Just incorporate that element of the rates when you discuss your budget. Request guidance, monitor the rate, and make sure your timeline goes a little bit in accordance to what the market is showing you, so you don't get a surprise at the end. FX or foreign exchange is a world of regrets. I often see clients being very insecure about deciding when to exchange their funds. And that's because after you've taken your decision, actually the rate is going to continue changing. So what can you do in order to know when is the right time? Well, I will just say, just be aware of your circumstances. And a good tip here is that when you find the property to buy, have a look at the rate. And that will give you a little bit of an indication or a guideline of where you can afford or where would you like to buy. So I can find the property today at 117, looking at the rate, and say, well, ideally, I would like really to exchange my funds at 119. But I cannot afford to buy below 114. That's my range. Anything close to 119, I'm winning. But I'm making sure that when I exchange my funds, it makes sense for my budget. That will help you in the conversations with the experts and will help you understanding the market and take the right decision and feel comfortable with it, even if afterwards the rate keeps on moving. Finally, don't forget why you are buying a property in France. Try not to be obsessed over the rates. You are not buying in France to speculate with currency. Most of you are buying in France because you love the country, the culture, the pace of life. And it is important always to keep this in mind and to make this journey what it should be, an enjoyable adventure to access a lovely property in France. So best of luck. And with this, I will pass back to Zoe, and hopefully I will be able to answer some of your questions. Let me just stop sharing. And back to you, Zoe.
Thank you, Mar. I'm sure that's helped many buyers to understand the importance of securing the best currency exchange rates. Now I'm going to put a couple of your questions to Mar. So the first question is, what are my options for transferring a sterling pension into euros?
Okay, so if you are moving to France and your pension is still in the UK in sterling, obviously it depends on how much you need that pension for a living. I will say that if you want, again, to have this peace of mind and knowing that the value of your pension is kind of always reliable and always the same, you could actually fix the rate and lock the value of that pension. Furthermore, you could create a direct debit by which every month you receive your pension in France at the same rate. Having said that, some people is a bit more adventurous and say, I don't need the pension every month. So you could accumulate the funds in sterling in the UK. And when the rate is actually good, getting some guidance, you could then take the opportunity and the advantage of the rate to move that money as a lump sum to France.
Great, thank you, Mar. So one more question for you at the moment. How much are the transfer fees to exchange currency, and what is the best way to minimize these fees?
Well, actually, for me, this is a very easy question. Transfer fees could be different depending on the company. A bank sometimes can charge you up to £40 as a transfer fee for an international. If you are in the States, watch out also for American banks. We actually don't charge any transfer fees for clients. And some people may say, how do you make the money? Well, we make the money out of the rate, but because we don't do anything else but foreign exchange, we're able to go in the open market, get very good rates, pass a saving to our clients and still make a profit. And for FrenchEntrée, by the way, clients or for FrenchEntrée members, we don't charge any transfer fees for life, regardless of the amount that you will be transferring. So not only for that big, maybe lump sum that you're doing as a part of your property purchase, but if afterwards you need to do any regular small amounts of money, we will not charge you any transfer fees for those payments.
Well, I'm sure that's very good news for anybody looking to transfer currency. And as Mar mentioned, we do offer that no transfer fees for FrenchEntrée members. So do make sure if you open a currency account with them that you mention that you're coming from FrenchEntrée. And so we'll stop there with the questions for now for Mar. But remember, if you do still have a question for Mar, put it in the Q&A box, as we'll have a little bit more time at the end for more questions. Before we go over to our third and final speaker, we're going to do another quick poll, which I will just put up on the screen for you now. Let me just find it. There we go. So you should be able to see that on your screen now. So the question is, what is your primary reason for buying in France? So are you looking to purchase a holiday home, a second home? Are you looking for permanent residence? So you're looking to move to France either now or in the future, or you're looking to invest? So you're looking for an investment property. And I'll just leave that up on the screen for another few seconds. Most of you seem to have already answered. Very quick off the mark today. I'll give you a little bit more time. Right, I think you've all answered now. So I'm going to end that and I will share the results with you. And it's quite an overwhelming majority for permanent residents. So a lot of you are looking to move to France. Okay, I'll stop sharing that with you now. Remember, if you are looking to move to France, the third part in our webinar series, which is taking place in November, we'll have an expert panel focusing more on the actual moving process to France and questions that are more related to people during that moving process. Right. Thank you for taking part in that poll. Let's go to our third and final speaker now, which is Rosemary Shepherd from Blacktower. Over to you, Rosemary.
Thank you, Zoe. Good morning, everybody. It's great to be with you all today. My name is Rosemary Shepherd and I work with Blacktower Financial Management here in France. So I am actually based here in France. Blacktower have been in the wealth management business for over 35 years now, which is a great thing to say for the international field. My personal journey to France started nearly 20 years ago and resulted in us actually buying a field on which we've been building for nearly 14 years now. It's still ongoing. The point of telling you this is that I've been where you are right now. We moved to France permanently in 2015 with our two young children who were aged 9 and 12 at the time. So we've now gone through 6.5 years of French bureaucracy and the French school system, with my eldest having just started at university in Bordeaux. France is not an easy country to navigate when it comes to certain things, your finances and your taxes included. The tax system was largely covered in the first webinar, so I'm not going to go over that in too much detail, but there are some things that you need to consider before you move to France and before you become French tax resident to avoid some potentially large tax liabilities. I'm going to try and share my screen. Okay. Can you all see that? Yep, brilliant. Okay, so what do we actually need to consider before you become French tax resident? So first point on here, my current savings and investments and my liabilities to tax once I'm no longer a UK resident. So many of you have probably spent years saving up your ISAs, your premium bonds, various investment bonds that are hugely tax efficient whilst you're a UK tax resident, which is absolutely brilliant. However, as soon as you leave the UK to become a permanent resident in France, you no longer have the benefit of that tax efficiency. Effectively, you then have to start reporting any gains that you make on those ISAs, those premium bonds, those investment bonds, at least on a yearly basis, if not potentially on a monthly basis, to the French taxman to stay on the right side of him. Now, that can become quite an onerous thing, but unfortunately, it's just the way it is. So what I'm saying here is it's something that you really need to plan for, because as a UK resident still, your ISAs and your premium bonds, if you cash them in now, there's no capital gains tax on those because that's part of the tax efficiency you have in the UK. Again, once you move to France, if you were for some reason to cash in those ISAs or cash in those premium bonds and your investment bonds, potentially you could have a seriously large capital gains tax liability on those, because not only does the capital gains tax apply, it doesn't just apply from the moment that you move to France, it potentially will apply from the moment of inception. And for some of you, that might mean 15, 20 years worth of savings and investments. Okay, so really, really something to think about. And it's not necessarily something that you do need to cash in, but it is something to consider and get some personal advice on. Second point, what will happen to my pension and my tax-free lump sum? Okay, here's a big question that we always get on the tax-free lump sum. I'll talk about your pension first. So effectively, if you have a state pension, if you have any, sort of any government pension whatsoever, nothing's going to change with that. That will continue to be paid regardless. The problem arises now, unfortunately, since Brexit, very individually from different companies. It's not a one-size-fits-all with how your pension will be affected. We're coming across a lot of companies that are simply just refusing to give flexible access to non-UK residents to their personal pensions, which means that effectively you're going to have to transfer that pension somewhere else to be able to access it, or draw it down in its entirety, which again could incur you quite a large tax bill. Now, to transfer your pension, you might think, oh my God, that is an enormous thing to do. It isn't, and it doesn't actually entail taking it out of the UK as well, which is coming slightly onto the next point, because you can have a choice of either an international SIPP or a CureOps. You may have heard about CureOps, you may have done some research on CureOps, you may not like the idea of a CureOps, but again, it's something I'm not going to go into detail in on this, because it's not something you actually need to consider before you move, but it is something to consider once you are here, depending on how your pension is being treated by a UK company. The biggest thing here is your tax-free lump sum. This is the thing you really, really do need to think about before you move. Unfortunately, there is no such thing as a tax-free lump sum in France. So if you are considering potentially using your tax-free lump sum from your pensions, if you are over 55 and able to access them, for part of your property purchase, you certainly need to do this before you move. It might just be that you're considering using this as part of, to enable you to do the things you want to do in retirement as well. Again, you need to consider this before you move. So again, this is where it's the right time to take advice from a point of view of your tax-free lump sum. When you get to France, you may think you can take your tax-free lump sum, pay it into the UK and nobody will know. Unfortunately, that doesn't happen anymore either. We're now in a position of automatic exchange of information, and believe me, HMRC will share anything and everything with the French authorities once you are tax resident. Next point is, what if you don't want to move your money out of the UK? Well, in respect of your pensions, you don't have to move into a CureOps. There's still the UK option, but with the ability to passport. So you don't have to in respect of your pensions if that's the right thing for you. To be honest, this question isn't usually about moving your money out of the UK. This question is quite normally about, to be honest, when you get to the root of it, is about not wanting to move your money and your savings potentially into euros at this moment in time. Sorry, Mar, but this is one of the situations where people tend to maybe want to keep their savings and investments in GBP for the time being. That is absolutely possible if you do that through an international advisor. It might be that your savings and investments are there actually for your beneficiaries. It's not something that you may be going to use. So why would you want to bring it into euros if ultimately it's going to your children, your grandchildren, nieces and nephews that all still live in the UK? So it's a possibility, but again, down to personal circumstances. How can you pass it on tax efficiently? Obviously, pensions are tax efficient in themselves, so you don't necessarily want to pull all your money out of a pension, because that's one tax efficient way of moving money across to your beneficiaries. But in France, there's also many other things that you can do. One of the main things actually is the assurance fee. So I'm going to talk about that a little bit more just now. So an assurance fee is, again, probably something you've done a little bit of research about, found a little information about, but there are unfortunately a lot of misconceptions in respect to the assurance fee. So I'm going to go through some of the basic points that are there for an assurance fee. So what is an assurance fee itself? It is actually a wrapper. It's like, I liken it very much when I'm talking to clients about it, like a stocks and shares ISA in the UK. It's there to wrap your money up in the most tax efficient way it possibly can. So like with the stock ISAs in the UK, your investment is allowed to grow tax-free, okay? Should you wish to make withdrawals from your assurance fee, you can do that, but it's again, this is very tax efficient because it's only the part of the withdrawal that's subject to a gain that is subject to tax and social charges. So effectively, if you make a withdrawal, certainly in the early days of your assurance fee, what you are taking out is mainly return of your own capital. So there'll be a small portion of that that's actually gained some interest. And it's that part that's actually subject to tax and social charges in France. So again, making it really, really tax efficient from a drawdown perspective, unlike your income from pensions, which is fully taxable. So how is that taxed from an assurance fee perspective? So for higher rate taxpayers, you can choose to be taxed at the lower rates attributed through the assurance fee regime. So there is a flat tax rate of 30%. That's made up of 12.8% investment tax, certainly in years 1 to 8, plus 17.2% social charges. However, after year 8, if your net premiums are below €150,000, then you can benefit from a reduced rate of tax at 7.5%. There's also a reduced level of social charges should you hold an S1 that is in relation to your state pension. But again, I won't go into too much detail with that. Ultimately, though, if you are actually a nil rate taxpayer here in France, then potentially you can use your nominal rate and therefore not pay tax, just the social charge element on that small part of the gain that you've taken out of the withdrawal. The bottom point here on this slide is where most of the misconception comes in about assurance fee. Assurance fee is fully accessible if it's set up in the right way, which is why you need to take proper advice on this. There are varying versions of assurance fee from a point of different companies that offer them. So after your 8th year, so you've had this assurance fee, you've moved to France, you've had your assurance fee, 8 years, fantastic. You are actually eligible for an additional tax-free withdrawal allowance of €4,600 per person per annum. So if it's a joint policy that you have, husband and wife, for example, you can gain €9,200 extra nil rate band tax-free withdrawal there. And that's quite a lot of gain that you could take out of your assurance fee before you're then subject to tax. Unfortunately, however, that doesn't attribute to the social charges as well. They are still there for you. If not, and you go above this tax limit, then obviously it's taxed as above. So how can it be tax efficient in the long run for tax planning, for your heirs, for your beneficiaries? Okay, this is brilliant because from a point of view of an assurance fee, unlike with the property and the forced heirship rules that are just changing, which Dan referred to earlier on, which is causing a massive headache for people, unfortunately, at the moment. With an assurance fee, so this is anything that is not encompassed in your property, any savings investments that you've got. The best way you can use that for your beneficiaries is to put it in an assurance fee, because you can name anybody at all from an assurance fee, and they can actually benefit from the equivalent of €152,500 tax-free. With anything over and above that, up to a limit of €852,500 at a rate of 20%. So this means that anybody who is not a blood relation to you, so it could be stepchildren, non-married partners, friends, grandchildren, nieces, nephews, they won't be subject to that usual inheritance tax of potentially up to 60%. Not certainly on that first $152,500 and a reduced above that. So different amounts, I do have to point out at this point, do apply if the initial premium is invested over the age of 70. So going back to a previous point we made about moving the money out of the UK, yes, it does come into the European jurisdiction. However, your savings can still be kept in sterling, okay? So sterling, euros, US dollars, I do believe we can still do Swiss francs as well. And also importantly on this point, if you eventually potentially move back to the UK, or you might even not move back to the UK, but you might move on to Spain, somewhere else in Europe, this actually can be ported with you and it becomes still tax efficient, certainly if you move back to the UK, because it actually will be ported back as an offshore bond, which does remain still tax efficient for you in respect of the growth, and also draw down as well under current UK tax rules. So not only will it be efficient for you while you're in France and keep everything as tax efficient as possible, it potentially will help you going forward if for that whatever reason France isn't your final destination. Again, you can have a choice of investment options to suit your specific requirements and your level of risk, which can be altered as your needs change. So if I'm talking to somebody who, similar to me, arrived with young children, working person, my risk is going to be so much different to somebody who is at the point of retirement. Because at the end of the day, when you're at the point of retirement, these savings that you've built up over years and years and years, what is there for you to have that fantastic retirement and enjoy that retirement, and potentially even for your essential expenditure. So it's so important that we look at you as an individual and we look at your risk profile, and that's what makes the difference. So it's not a one size fits all, definitely, and it's not that you will make so much money out of this or you will make so much money out of it from that or that or that. It all depends on what your risk level is and what we put within that wrapper of the assurance fee for you. Final point on this is that assurance fee policies are exempt from wealth tax. Wealth tax is very much determined by your property ownership really in France now, but it is a good thing to have that additional element to the assurance fee, that it is not going to be part of your wealth tax calculation. So what do you need to do now? Okay. Biggest thing I can say to you is take early advice, and preferably before you move. We are seeing more and more people now coming to us at the point that you're at now in your property buying process. It is so important. Everyone's circumstances are different. One size does not fit all, as I keep saying, and you will benefit from receiving professional advice, whether you choose to follow it or not. From a point of view of coming to us, an initial conversation is free of charge. We don't charge for that initial conversation with you to see what elements that you do really need to consider before you move. If you do make that mistake and you come here and you have major issues where you need to draw down lumps of money, then it could cost you massively in tax. So conversation beforehand costs you nothing. Most importantly, bon courage on your continued journey. I hope you find the home of your dreams and you end up in France enjoying it as much as myself and my family do now. It's the thing that we have no regrets over whatsoever, moving here, and are thoroughly loving the sunshine right now today. So with that, I will pass back to Zoe, and thank you very much for listening.
Thank you, Rosemary. I'm sure that's going to be extremely helpful for anyone looking to move to or retire to France. So I'm now going to put a couple of your questions to Rosemary. So the first one is from Darren, and he says, with a stocks and share ISA, if I sell all my shares and rebuy them again in the same ISA just before moving to France, will capital gains tax only be due from that point on?
If it's in the same ISA, no, because that ISA is basically there from the beginning of when you started that ISA. You've got the same ISA, so what you're doing is effectively bed and breakfasting, but it doesn't work if it's within the same vehicle. It doesn't actually apply to the investment inside that. It's the beginning of that ISA, I'm afraid.
Right, okay, thanks for that. One more question. Can I still transfer my British pension to a QROPS after Brexit? And is it true that it will now be liable for the 25% tax?
Yes, you can, and no, it isn't. This is something we were expecting to have changed at the budget earlier in the year, but actually nothing was said about QROPS whatsoever. So yes, there is the overseas transfer charge of 25%. As it stands currently, if you, once you've made the transfer, if you remain a tax outside of the UK tax residency for a minimum of 5 years, then you shouldn't have that imposed. That is as it stands at the moment. Unfortunately, we don't know what will happen. So next budget or at any point in the coming months, the government could change their mind and impose that overseas transfer charge. So it could be that QROPS has a limited lifetime left, but as it stands at the moment, no, that transfer charge is only chargeable if you return to the UK within 5 tax years.
Great, thanks for clearing that up. So I'm now going to open up the questions to our whole panel again. So I'll just check I still have everybody with us. Danny, you still there? Yep.
Yes. Yeah.
And are you still there? Great. Okay. So the first question is for Dan. If I move to France, will my UK will still be valid?
Yes. Very, very short answer. Yes. It's whether it'll be appropriate is a completely different issue, but it'll still be valid. So. I had an interesting conversation with a French notaire a couple of years ago who he sent me some documents to do a probate on, and he had an earlier French will he'd sent me, and also a later English will, when I looked at the documentation, he'd completed the administration on the basis only of the earlier French will, even though the later English will said, I revoke all my previous testamentary dispositions. And I said to him, why have you done this? And he said, because this English will is not valid in France. And I said, well, actually, it's been valid since 1963, when France entered into the Hague Convention on universal recognition of testamentary dispositions. So we get a lot of this, but yes, the answer is it's going to be formally valid, which is the form of the will. Will it be recognized as a will? Yes. Will it be essentially valid? Will it be able to carry out the terms? Not necessarily, no.
Okay, that's another reason why it's essential to get professional advice on these things. So the next question is for Mar. This one's from John. Can Moneycorp arrange for payments directly into my French bank account? Up until now, I've been sending payments to my French account from my UK HSBC account.
Yeah, that's what we do. So if you have funds in the UK, it doesn't really matter with who you are banking, because Moneycorp essentially is the intermediary that is going to take your funds from your bank, change them, and then send them to wherever you want. If it's that your bank account in France, that's how we'll do it. And of course, I suppose the beauty of talking to us is to have a look at the amounts that you are sending, how regular you send them, and whether we can offer maybe a solution that is more cost effective, either accumulating the payments, or maybe, as I mentioned at the beginning, creating a more of an automated way of sending that money with a bit more protection to the account in France.
Great, thank you, Mar. This one's for Rosemary. How many assurance V contracts am I able to take out, and can each one have a different beneficiary?
Yes, you can have several assurance fee contracts, but the same beneficiary can't benefit from more than €152,500 tax-free at nil rate band, should I say, from the same person. So you could have one beneficiary who can benefit. So say, for example, it's a daughter, a child, they can benefit from €152,500 from one parent and one from the other, as long as those two assurance fees are separate. So again, it's about planning in the right way. So I suspect that's what that question is asking.
Thank you, Rosemary. Dan, another question for you. Is it a good idea for an unmarried couple to enter into a PAX, a French civil partnership, in order to purchase a property together in France?
So I should probably get a job as a partnership arranger or marriage counsellor, because you know, from a legal point of view, there are generally beneficiaries. Benefits with being involved in either marriage or a PAX. So the short answer is yes. There are tax and also succession benefits from entering into a PAX.
Great, thanks for that, Dan. This question is from Mar. Is there a minimum amount to buy through a forward contract? Do I need to have the minimum, let me start that again. Is there a minimum amount to buy through a forward contract? And do I need to have the full amount available?
Yes, I think that there was someone else in that poses a similar question, asking if there was any cost to a forward contract, which I didn't mention. Actually, there is no cost to a forward contract, and there is no limit of how much you can fix. However, what you need to be aware is that when you enter in a forward contract, one, you need to have 10% deposit. You need to have the availability of at least 10% deposit to make sure you guarantee that contract. So you don't need to have all the funds, but you need to be able to deposit 10% of the full amount that you are fixing. Okay, so it's great when you are waiting for some funds to get to you. However, you need to bear in mind that there has to be that 10%. And the second thing that I didn't mention is that also what you need to be aware is that once you enter in a forward contract, that contract cannot be moved. So you have to be completely confident that you're going to have the availability of funds on that day when the contract comes to maturity, and then we are going to ask you to pay for the whole amount of what you have fixed, basically.
Great. Okay, thank you. Rosemary, if I transfer my British pension to a QROPS when moving to France, what happens if I later decide to move back to the UK?
That's absolutely fine. Your QROPS, what a QROPS is a qualified recognised overseas pension scheme. So they are recognised by HMRC. So it would just continue to be a personal pension when you move back to the UK in the form of a QROPS.
Great. Dan, is there a way to transfer or gift a French property in order to avoid inheritance tax?
Yes and no. There are a lot of different options. So you could look at it's possible to do a donation, which in the UK we have a kind of a 7-year rule that says if you gift assets and don't benefit from them and you survive 7 years, then it doesn't trigger inheritance tax on those assets. There's a similar setup in France, but it's a 15-year rule. It's a longer period of time. There are other ways of mitigating tax liabilities as well. One very popular structure that we use in France is an usufruit, which is a life interest. And what sometimes people decide to do is they give the usufruit to the third party, whoever they want to give it to, so they give the note propriété, which is what we call in trust terms in the UK a remainder interest, and they retain the usufruit, and then when they pass away, the share that they've given automatically passes to the bare owner, as they call it in France. So and there are tax benefits of doing that. There are reduced tax liabilities as well. So those are just some of the options. There are other things that you really need to consider, and particularly when buying property, you really need to understand what the structures are, the legal structures that you own the property in. Whether you want a tontine, for example. So tontine is similar to in the UK we make a distinction between legal and beneficial ownership. So you can and you can also buy property either as joint tenants or tenants in common, and you don't have a distinction in France between legal and beneficial owners, but you do have a distinction between what we call joint tenants and tenants in common. If I just quickly explain, so with a tenancy in common, both parties own their own share of the property. Okay, so if two parties own it, the presumption is they own 50% of the property each. That can be changed by notaire, or it can be recorded differently by notaire. But they both own a fixed share of the property, and that in the UK would be called tenancy in common. With a joint tenancy, both parties own 100% of the property. So if one of them dies, the survivor then receives the whole of the property, and that's how a tontine works. Okay, so two joint owners own the property together. One of them passes away, and the property automatically passes to the other. However, there are adverse tax consequences, particularly if you have children, you lose one of the tax-free allowances, and there are other potential complications with depending on how and when the tontine is set up. It may be possible for a disaffected child, for example, to make a claim against the estate.
Okay, great. Thanks for that, Dan. A final question from Mar. At what point in the property buying process should I open a currency account?
I think I mentioned is actually never too early. One of the things I didn't mention is that actually opening an account doesn't involve any cost or obligation. So I always, when I speak to clients of mine that are thinking of traveling to France to look for properties, I always say, well, it's a good idea to maybe just open the account, have an initial conversation that will help you knowing what you can afford, taking into account where the market is. And then, as Dan mentioned, when talking about the whole conveyancing in France, is a little bit quicker, I would say, than in the UK. So you may be asked to take action a little bit faster than you would do in the UK. So you have the security that if you are traveling to France and you find a property to buy, you can always pick up the telephone and speak to your dealer and start discussing, can I still afford that property? Where is the market going? You may want to fix the things then and there. It's up to you, but it's never too early for us. We speak with clients and we deal with clients from the very beginning when they are still looking for properties and they need a bit of help with budget, to people that come to us just as they are about to pay the deposit, thinking, I'm concerned about this gap in between the deposit and completion. What shall I do? So yeah, never too early. There's no cost or obligation. So it's always a win-win to speak to someone before actually you do travel to France to find a property.
Great, thank you, Mar. Just a couple more questions. Rosemary, I pay tax on my pension in the UK. Would I need to pay tax in France on my pension if I became a resident as well as in the UK?
No, you wouldn't technically pay it twice because we have the double taxation agreement in place, which Dan referred to earlier on. It depends what type of pension it is as to whether the tax will be always taken at source. So say, for example, if it's a state pension or government pension, that always will be taxed at source in the UK. You then afforded a tax credit, which basically you declare the pension income on your tax return in France, along with the tax credit. If it's a private pension, however, you should get your pension, once you are a tax resident in France, you should get an NT code, which is a non-tax code, that you get from HMRC that is given to your pension company in the UK, which means that they should pay then all your pension income gross, which means that you then have to declare your pension income on your annual tax return, and the French will tax it under the French tax regime. Your pension effectively is always going to be taxed when you're a tax resident under the French tax regime, but if it is something that you have no choice over it being taken in the UK, i.e. government pension, state pension, then the tax credit will offset any tax owed in France. So it's not a double tax, but as Dan alluded to earlier on, if under the French regime you would pay more tax than you've actually been taxed in the UK, potentially there will be a top up.
Okay, thanks for that. Right, a final question for Dan, and Rosemary might have something to say on this as well. How has French capital gains tax changed since Brexit?
French taxes seem to change with the wind, particularly capital gains tax. Do you know, every time we advise clients on French capital gains tax, we look at the rules again, because you know, they do change all the time. I don't know whether you've got anything to add to that, Rosemary.
I think, well, I have to caveat this with I am not a tax expert to start off with. However, I think, to be honest, there hasn't been a huge difference with Brexit. To be honest, I think Dan's absolutely right. Unfortunately, tax changes left, right, and centre in France. Hence why we would always advocate that you use a tax expert, i.e., you know, a fully qualified tax accountant or tax avocat with in this scenario, because you know, things do change. So I don't think Brexit specifically has changed anything, because the double taxation agreement is nothing to do with Brexit. That's been in place, hasn't it, Dan, for, you know, many years. So that's not something that was actually affected by Brexit. So yeah, I don't think Brexit is actually the effect. Is just the fact that the French like to change tax as and when.
Okay.
So it might help if we make a distinction there between. So the tax rules in each jurisdiction change, but the double taxation double taxation agreement regulates the tax between the two jurisdictions. So it determines which jurisdiction is going to tax the assets. And as Rosemary says, you know, I can't think of any significant changes since Brexit, and you know, I think that's true of most taxes. There are some exceptions, and the other thing to watch out for really is in some EU jurisdictions, nationals of non-EU states are charged more tax than nationals of EU states, and that's becoming more and more common. In Spain, for example, there's capital gains tax is charged at a higher rate to non-EU residents than it is to EU residents.
Thanks for that, Dan. So all of that just highlights how important it is to get professional advice. So that's all we have time for today. Thank you very much to all of you who attended, and thank you so much to our panel for giving up their time and answering all your questions today. If we didn't get around to your questions, please do keep an eye on the FrenchEntrée website over the coming months, and you can also put any additional questions to us at webinar@FrenchEntrée.com. If you enjoyed today's webinar, if you found it useful, don't forget to sign up to the third installment of this webinar series, which is taking place on November 10th. In that webinar, we'll be focusing on some of the more practical aspects of moving to France, including removals to France, managing a second home in France, and also sewage treatment systems, which might not sound like the most exciting topic, but it is an essential consideration for anyone looking to purchase rural property in France. You can sign up for the next webinar over on our website. And while you're there, don't forget to register as a FrenchEntrée member and sign up for our free weekly newsletter if you haven't already. And finally, do let us know what you thought of today's webinar. Did you enjoy it? What can we improve on? What topics would you like us to see us cover in upcoming webinars? You can drop us an email at webinar@FrenchEntrée.com. Thank you again to everyone attending. Thank you once again to our panel, and we'll hopefully see you all on the next webinar. Enjoy the rest of your day or evening, wherever you are in the world.
Thank you.
Thanks.
Thank you.